Hey, good evening, everybody. This is Harmeet. Thank you for tuning in. We're going to be continuing our look at of the three major ETFs that I make videos of, and we follow with you guys and see where we're standing. It's been about 10 days or so since we last made a video. I just wanted to show you guys where we were. We're in this area or so, where we were discussing, that the first wave was over and so forth. And we're looking at SPY, guys. The first wave was over, and we're ready to see if we can get a continuation pattern going, and that's exactly what we got. So we got the confirmation when it first originally broke, okay, and then we got a secondary confirmation when it actually went ahead and started trading above this level again, and that's pretty much what we wanted to see. If for it to continue higher, that's what we're getting. There's a lot that has happened since the last time I made a video, and namely being that a lot of the questions regarding the elections are being answered. We know that at this point that Joe Biden will be the president come the inauguration day, January 21st, and Trump will end his term. And that has actually, from the looks of it, um, it seems the markets are bullish. They like what they're seeing. They are ready. This was the end. You know, that's what we looked at. Um, Marketing bottoming out around election and then having this major gap, major run up with multiple gaps. Okay, and that's exactly what we got. Obviously, the last one was a exhaustion gap, but everything else is kind of falling in place and works. At least I am expecting the that we will hit our target, obviously, for 375 next week. Um, that is 7 points, 7 points, depending on where we open come Monday. Uh, it's within reach. That could be done within a day and so forth. So what happens now? What happens? We're out of this big congestion zone. Okay, we're out of this big congestion area. We're out of this. Excuse me. We're out of this consolidation. We have an awesome bullish W pattern that looks like it is actually starting to show that it wants to go higher. It is breaking out. We have had some confirmation that it is just not a fake out breakout, as they call it. Primary breakout is right here from this gap up. We made another small W pattern, as you can see, and we are off and running. And here is your secondary confirmation at this point. We went back and forth, normal stuff, and now we're off and running, and we're higher than this level, and we're making new highs. Awesome. This is what we want to see. This is where we make our money as a trend trader. We are back in a trend. We are out of consolidation for now, as it seems. Anything could happen. Just be prepared. But for now, all I can say is that we are out of consolidation and we are in our money wave. Okay, we finished wave one, we finished wave two, and we are in three of three, as they call it, three of three. This is where we're at, and it's gonna get awesome. I think December historically has been, the window dressing month where they get them going. So where do we see the market going? So there's few places that we can expect the market to go. Okay, that being that, that we should at the minimum see equality. Okay, so these two waves at the minimum should be equal to each other. Okay, um, if they're not, that means the fifth wave is going to be smaller, and we can see a truncated or truncation of fifth wave, or a smaller version of fifth wave. And but for right now, as bullish as things are, there is no reason to believe that. I think we are going to go test some of these levels by the end of the year. Uh, my Again, what I wanted to see was hit 375. Again, I think we're gonna hit there. We have a great possibility that we will get to 393 and beyond, above 400, 418, if there isn't any an aberration or a volatile event that will stop us. We can see this is we are in the slow grind up now, and we can expect it to go up, but that does not mean that we won't see a fifth wave with the same magnitude and directionally speaking as the first wave. Okay, fifth and first waves tend to be one of those where you'll see fast moving high action, lots of volume coming in. Fifth wave being ending and the first wave being the starting. So, and the third wave is the more grinding, longer, that would has a lot of anticipation. People have come to grips with the fact that we are out of consolidation, and we are going up, so they're starting to put the money in. And the fifth wave, whereas where the FOMO hits people, and they're like, oh my god, I'm gonna miss out on everything, and here we go, and everybody's jumping in. That fifth wave, when it comes, you'll see it happens all over the place. Tesla is being one of those prime examples where it happens all the time. FOMO, 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 all over the place. And so that's where we're at. It's exciting. Let's see how we go. Just be prepared. I am not taking any short positions on. I have a few neutral positions that I put on, such as Netflix and so forth. But other than that, I'm expecting markets to move higher. I'm expecting markets to grind all the way into inauguration, and maybe expect a fifth wave from there. So, come Monday, if we have any sort of relief from the Congress, they'll get their act together and do what they want to do. And we're looking at December 7th, Monday morning. We will know if there is some sort of compromise in the Congress to get stimulus back into the economy, back into people's hand, and we could expect this to gap up quite a bit. So that's pretty much where we stand for now for on SPY. So let's look at the next chart, QQQ. So Q's, there were the last time we talked, there were a few things that I was kind of letting people know that these areas are very important. The way I explained it was, well, let's go back and look at the primary count and see what we were doing, the way we were thinking, and the way it had been. The primary count was that we were still in consolidation, okay, but we also had this X, okay, that X being one that is, greater than this point right here, this X, okay. So this is greater than this. I mean, the other way around. This is greater than that. Okay. So that kind of, immediately was like, okay, I know. Let's look at the truth. Okay. So we know that we've broken through the last resistance, last high. Okay. We know that we did not get very far and we came right back down. Okay, we know that this had all the characteristics of a first wave. Okay, we know all those things, that all those things happened because the fast and furiousness of this specific structure says that this could be the first wave, and now we were going into second wave. Okay, so there are areas that I was watching, like this one and this one, zones that I wanted to see confirmation, the price action to go higher, to actually confirm that we were out of consolidation and this was first wave of the larger wave set. Okay, so let's let me show you where we're at. Okay, And we were also saying, in order for to negate all of that and say that we ended our consolidation right here at this point, and this was one that the price action actually had to show that it can go higher than this. At this point, the confirmation point 303.50, and it did. It actually went ahead and crossed today. So that confirms that we are actually in a larger, the consolidation ended right here, okay, and we were prepared because that's when we put up an alternate account saying the consolidation is over, saying the fourth wave is over, saying get ready for the first wave. At least know and understand that that's what's going on, okay. That's what we were saying, that we wanna, okay, this is a little wrong, I don't know what happened, let's fix it. Yes, we know. Yes, we know. Okay, that looks much better. Okay, so we know that I again the thing that I was stressing was I did not want it to go, or I did not want to see price action get below 279.26, even to here. That just tells me that we were still in this X wave, X Y structure, okay? But that never happened. We actually stopped out at that point, and we started going higher. It did make it. This looks like a leading diagonal, which you see a lot of times in the first wave. Got our back test of this zone right here, um, and that just showed me that okay, we did have this A, B, C type structure. Okay, so that's good. So we're seeing a 5-wave advance, 3-wave correction. That's what we wanted to see. That's what we got. And on top of that, in the last few days, we also got a confirmation that we were above the last high. We end up making a new high. Okay, that happened. This was the most important part that we wanted to see for the continuation to occur. Okay, so we can say the fourth wave is over. At this point, the complexity made a really nice W, and we're ready to rock and roll and go higher. So where do we go from here? Let's look at some of the targets. Again, conservatively speaking, 3 versus 1 and so forth. This is saying is that at least the wave that I expect, at least I expect it to go right here to 314 through 15 area. That means it's going to be at least the same magnitude as that wave from here to there. Okay, but third waves tend to be extended ones. That's just stereotypically speaking. It doesn't have to be. You can have first wave extended, you can have third wave extended, and a fifth wave extended. But generally speaking, 2/3 of the time, third wave is extended wave. So knowing that, we can expect this and these zones to also be somewhere. I would, depending on how things or how bullish things get, we can expect them to, well, at least hit this area. Okay, at least hit this zone by the end of December. Okay, that's pretty much what I'm okay with that. If it hits this, I'm okay. I think that's great. I think that's wonderful. Anything above that, anything above, you know, this zone or the 161 zone, whatever you want to call, whatever, or beyond that, we don't know. Or beyond that, we don't know exactly, but that's saying that has high probability. This has 50% probability, and this is very ambitious by the end of the year. That's all it is. But knowing everything, that we can say that we are in the next leg, the next leg up, as they would say. We are in the next leg up, and we are ready to go and test some of these other zones. All right, so we're done with Qs. Let's see what else. IWM. This is a chart I've been bullish in all the way through, and if you went back and looked at my previous videos, and the reason I said that was because the way it was consolidating right here. This was expected. This is a little deep, I said, but that's okay. It happens. You know, we said that the wave 2 ended because, again, we got this large first, this huge wave, okay? This large third wave. This is as extended, as powerful as it can be. It is above our confirmation point, and it never came back to test this area, okay? It kind of held. It came back, okay? It came, and held it. Okay, this pattern is one of my favorite patterns to trade, where you have a massive gap up, it kind of goes that way, and then it comes and does a hook. Okay, you'll see that in bullish charts over and over and over again. You can trade them. There is art and methods to trading these properly. Okay, someday we will go over them, someday we won't. Maybe they'll be part of some other lessons that I will put out, but not specifically this. But this is something that you want to, if you see it, go ahead and start preparing. If you get this big of a gap up, you get this big of a gap up, and the gap holds, okay, the gap holds, you can expect to go higher. What a difference, few months make. What a difference few months make. This is by far, IWM is by far the most bullish of the three ETFs that we've discussed. It stays that way. It has been that way since October, since I started making these videos. We will continue to trade it bullishly, day trade it all day long with SPY and QQQ. I usually look at footprints to know exactly when to get in, when the big money is getting in, and so forth. We did, again, broke out, finished the first leg, finished the second leg, and we're off and running to the third leg. Okay, stereotypical stuff. We confirmed again, we confirmed again, we confirmed we never broke that low, we confirmed. That's all matters. We're bullish, we're going, and just as long as you manage your risk, this should be one of the easier trades to make when it comes to IWM. What are some targets? Same way that I structured QQQ. I would expect it to get to 197, 198 zone by the end of the year. If we are ambitious, we'll see it break 200, and if things get super bullish by the end of the year, we can see it get to 208 area. But expect it to get to 208. Okay, expect it to get to at least 208, and this is your trade zone. Expect, obviously you're gonna get some up and down, up and down, up and down, but be ready. IWM is very, very bullish. There are lots of small caps that are firing right and left. Lots of activity happening. There's lots of volume. Even the cheapies, penny stocks. There's lots of volume, lots of money flowing in. There's lots of happening. Some people say, hey, this is something that has to do with seasonality. Around this time of the year, every year, penny stocks just take off. IWM tends to have, somewhat money pour in and so forth. But that's purely anecdotal. You can go back and do your own research and decide if it is or it is not. But for now, what it looks like for right now, for today, and going into Christmas holidays, expect it at least to get to this point. Okay, that does it. Thank you so much for tuning in. I really, really, really appreciate it. Let's keep going into next year. There's a lot to discuss. There's a lot going on. Maybe we'll start adding other markets. Maybe we'll add gold, maybe we'll add silver, maybe we'll start looking at different ETFs like semiconductor ETF. We can start looking at transports. We can look at all these different things that I actually look at on a weekly basis. I don't look at them every day. I look at them on a weekly basis because that's information that I need has to happen, or the data that needs to be accumulated for me to get and interpret what I need to interpret out of it. It takes about a week to 10 days or so. That's enough points, data points that I can say this is happening, this is what's happening. It's the same thing that we're doing here, it's the same thing, the amount of time it took from us, when we were about at this point, we're seeing, we were getting here. This took about that long of a time to say, hey, 10, 20, 10 to 15 days, this, we can comfortably say this is where we're at in our analysis and where we stand. It is very important to let data come in and don't shortchange yourself, because if you try to get ahead of yourself, you're gonna get hurt because your analysis is going to be incomplete because you have lack of data. Okay, the more data you have, the better your analysis will be. But there is some things that's too much data because you're going to miss out on trades. So just be mindful, do your best. This is awesome. I'm really excited. I'm really excited for this month. I'm really excited going into the next year. I think this is going to be great, with a mindfulness of knowing that anything can happen in the markets on any given day, that we can just drop everything and go back into consolidation or go back into bear market. Who knows? But that's the thing, like, just be prepared for every day, every single day. Everything is different. Okay, have an open mind. Do not try to think that you know everything. Last chart before we go, actually, I know I said goodbyes, but last chart I want to look at is just this Wix. This is really interesting. I'm not sure if any know that this is pretty much a regression line. That's what we want to see. And it looks like that we are getting ready to settle back into this Darvas range that we were in all through this. This is the range. This is where the grinds happen. Okay, then you have some volatility, but this is just taken forever, and we're finally seeing that it's getting into this the stereotypical reversion to the mean Darvas range, the VIX I want to see, where things are kind of getting calm and getting ready to grind up. That is another clue that I have, knowing and understanding, hey, get ready, we're gonna, you can stay in the trades a little bit longer, and you can be a little bit more aggressive on the things that are moving. You're gonna have smorgasbord of stocks that are going to be going up, that are or consolidating, going up, consolidating, and then a few obviously that are going to be going down. Mindful of the rotation, mindful of the markets. That's all I have to say. Thank you so much, and we will talk soon.